Well, I'm not sure if you were paying attention yesterday, but the 30-year mortgage rate has once again jumped to over 7%. If you remember our conversations from the last 9 months or so, we have learned something pretty important. We have learned that above 7% is where demand, frankly, disappears. The unfortunate part about that statement today is demand was already weak. We certainly saw an uptick over the last 10 days or so, a little bit more activity. However, I believe with mortgage rates jumping over 7%, we are once again going to see demand destruction. I think it's going to be really interesting to see what Friday brings with the existing home sales. I checked again this morning, and the experts are still calling for 4.12. I think that is frankly comical. I'm thinking this will be sub 4 million, but again, we shall see. But again, mortgage rates over 7% doesn't change the story for us. As investors, we want less demand, we want more supply, and we want, frankly, more motivated sellers. The good news is, as mortgage rates go up, all three of those come to be. Also, we should mention that we are very quickly getting to the end of the spring selling season. For a lot of people, that could be around Mother's Day if you're in the King County area like Beth Traverso. It could be Memorial Day like a lot of the country. It might be June 15th, but wherever you put the end of the spring selling season in your market, we are very close to the end. Then, folks, it's going to get real. As we get to the end of the summer, into the fall, and ultimately the winter, I stand by my call that 2025 will be the low for cycle for transactions, specifically existing home sales, sub 4 million. And I also believe that investors, right, the ones that do the work, right, motivated, look for motivated sellers, write disrespectful offers, follow up. We are going to increasingly get amazing deals. So do the work, believe in yourself, keep going, don't stop, trust the process, and enjoy. As we talked about on Sunday, this week is full, just chock full of Fed speak. I've got stuff from Fed President Bostic, Kashkari, Jefferson, and Williams, with more to come tomorrow, I am sure. We'll just go in the order that I read them. Bostic, Fed President Bostic, said, we could pull forward actions if trade negotiations pick up. What's he basically saying there? He's like, hey, if we start to see these agreements like the UK and others go from pause to execution, maybe we'll pull forward our activities. Bostic also is the one that's now saying, I only see one interest rate cut this year. Some say October, some say December, but regardless, at the end of the year. Fed President Kashkari, investor confidence is key to whether the debt levels are a problem or not. Folks, this downgrade by Moody's, as you saw in the stock market yesterday, was really a nothing burger. It opened up down but closed higher, as I thought it would. But what Kashkari is really pointing out is investors, rest of world, if they start to lose faith in the U.S. dollar, the debt, they think a default's coming, whatever that is, they're going to start to allocate dollars elsewhere. It will never be an all or nothing thing, but even if they just allocate 5, 10, 15% of what used to be U.S.-based assets somewhere else, that would be a problem. Fed President Kashkari says, net, AI will be strongly positive for the economy. That's going to prove to be interesting, right? AI certainly would likely add efficiencies. I do think that AI will create new jobs that we haven't even thought of, frankly. But also AI will replace a lot of jobs. And just like all technology innovations, there'll be winners and losers, I think is fair. But Kashkari says, don't worry, it will be strongly positive. Businesses are holding off on investment amid uncertainty. Folks, this is a big deal. right, there's always this three legs to the U.S. economy: consumers, business, and government spending, right? It is GDP. And we already know that the consumer is pulling back. But now we see businesses. Businesses are pulling back. This is going to have an impact. And then finally, from Kashkari, there is a big uncertainty now in the economy. Again, I think uncertainty is going to be the word of the year. This is causing this kind of air pocket in the economy that we will have to get to the other side, probably in the next couple of months. All right, Fed President Jefferson. It is too early to tell how the labor market will be affected by the administration policies. That's an important conversation, because when I think about the dual mandate, stable prices, full employment, I constantly ask myself, what number breaks the Fed? What do I mean by that? I am of the belief that if the job market deteriorates unexpectedly and or quickly, that the Fed will come in with some big cuts. So today we have an unemployment rate of 4.2. I ask myself, when does it break? Is it 4.5? Probably not. Is it 4.7? Maybe. Is it 5? Probably. And then I ask myself, how quickly? Do we get there in 3 months? 9 months? 12 months? One of the things when you think about the unemployment rate, it's not necessarily the number, but at the rate of speed, right? The rate of change, they call it. So that's equally important, right? Typically, unemployment takes the elevator up and the stairs down. So we'll have to watch that. Final thing from Jefferson's: risk to both jobs and inflation. Thus, we must wait and see. Again, higher for longer, no cuts coming. I can't believe the market's still pricing in June or July cuts. I think the Fed is being remarkably consistent here. Finally, from Fed President Williams, we will take time beyond June and July. Folks, if you're not paying attention, the Fed is telling you no cuts in June or July. Again, Williams, we will take time beyond June and July to form a clearer outlook. And finally, tariffs could raise inflation and unemployment. Hello, stagflation. A couple other members of the finance world that talked yesterday, Ray Dalio and Jamie Dimon, I think need to be, also Jane Fraser from Citigroup. Ray Dalio basically says that the Moody's downgrade misses the big risk. This is important. This is probably going to be the conversation with Anna Kelly later today. Moody's downgrade misses the big risk. Governments will just print their way out. And then this is my quote: inflation is a feature, not a bug. So Ray Dalio is basically telling you that the U.S. is not going to default. The default risk is not there. But what we will do is print, money printer go burr. And that will be inflationary and perhaps significantly inflationary. Again, folks, inflation is a feature, not a bug. If Ray Dalio is right, what should you do? Well, frankly, the story hasn't changed. Buy assets, hold for the long term, preferably assets that cash flow, preferably assets that you can lever up 5-to-1, right? 20% down. It is really a simple game. And then Jamie Dimon, the market is too complacent. He expects S&P 500 earnings growth to collapse. That is not good. How about the CEO of Citi, Jane Fraser? The market is signaling a shift by moving price to greater risk into assets. Basically, this goes back to the notion that investors are demanding higher rates for perceived greater risk, i.e. the 30-year bond going over 5%, the 10-year bond going over 4.5% yesterday, although I think it closed below that. Deutsche Bank, the U.S. economy is experiencing the death by 1,000 cuts. Ouch. As confidence in the national debt erodes. Currently, the debt, last I saw, was $36.2 trillion. That is crazy. Looks like the American consumer set another record. We hit an all-time high for debt. All types of debt, student loans, cars, credit cards, home loans, now a record high. Article went on to say, as the economy slows, to expect access to credit to get harder, which I think is right on. We did get some earnings today. We got Home Depot. They beat on revenue but missed on earnings. They actually had weak same-store sales. Also, Viking. Viking was one I was looking forward to because, again, Viking Cruise is expensive. Also, it's an indicator of what the wealthy are doing. Turns out they beat top line, beat bottom line, and have sold 92% of their capacity in 2025. So the wealthy baby boomers and the like are still spending, still traveling, still enjoying their life. A couple more points and we'll wrap this up. Home Depot CFO said, "We will not raise prices due to tariffs." This is interesting, obviously, because it is the opposite of what Walmart said. Walmart said, we're going to raise prices in the next couple of weeks. Home Depot says, not us. Also, it's important to point out in the article I read, Home Depot said 50% of their inventory comes from the United States. I didn't actually know that. I didn't realize it was that high. Levi Strauss is making some moves. Levi's is selling the Dockers brand. They're selling Dockers to Authentic Brands for $311 million. Folks, I hope you have an amazing day. Nobody joined school yesterday. So that was a surprise. Usually get 1 or 2 a day. Don't forget to join school. Get around the right people. Again, we have our 7th accountability group on Thursdays for multifamily. We've got Ladies of Real Estate. We've got various accountability groups, one for agents, out-of-state investing. There's so much to do. You've got to get around the right people. Make sure you've got the support network, someplace to ask questions. Also, I go live on Sunday. And yes, folks, I will go live this Sunday, 8 a.m., even though it's a 3-day weekend. I will be going live Sunday if you are around at 8 a.m. And, of course, don't forget to check out Steadily, the sponsor of the Daily Financial News. They are the person I routinely go to get my landlord policies. They just did a 4-plex for me, saving me just over $1,000, which is not too shabby. Again, I'll put a link below. It's only landlord insurance. Unfortunately, you can't go to them for homeowners or cars or anything like that. Just landlords. Check them out. See if they can help you. Maybe they can. Maybe they can't. Have a great day. Later.